Welcome to your class on triangles. Now, the concept with triangles is resistance constantly pushes price down and support constantly pushes price up. So price then ranges between support and resistance because it's pushed down by resistance, pushed up by support. Now, how you plot a triangle is you find one point of support and then another point of support. So you've got to have two shadows that meet or 2 points to form your support, and then 1 point for resistance, and 1 point, well, another point for resistance. So you've got 2 points for resistance and 2 points for support. Once you have your 2 points, you officially have a triangle. Whatever happens after that is all just price moving. Now, the rule with a triangle is that if, for example, this isometric triangle is coming from an uptrend, then it must break out to the upside. And if it is coming from a downtrend, then it should break out to the downside. But these rules were discovered so long ago, so obviously they do not work the same today. So what I've come to see is that your triangle could break out in either direction. And when your triangle breaks out, it is supposed to break out by whatever your base is. Your base is from your first point of support to your first point of resistance. The distance between the two, that is your base. So if my base is 10 points, then when price breaks out, it'll break out by 10 points. Now that is the rule, but it's not exactly what happens in the market. In today's day and age, you often only get about 50%, so you will only get 5 points if it breaks out to the top side or 5 points if it breaks out to the downside. Now, there are 3 main types of triangles. This is called an isometric triangle. There's also an ascending triangle, where you have got horizontal resistance and diagonal support. So price is generally being pushed up. Now the rule with an ascending triangle is that it should break out to the top side, but generally what happens is it breaks out either way. And then we have got a descending triangle where you have got horizontal support and diagonal resistance. So price is constantly being pushed down. So price is generally going to range between your triangles. Remember, regardless of whether it's an isometric triangle, ascending or descending, you still have to find your first 2 points for support and resistance. So this could also break out either way, but all 3 triangles break out by the same amount as the base. Or in today's market, it breaks out by 50% of the base. Now, let's look at a few practical examples of what a triangle looks like. For example, right in front of us here, this is a triangle. How do I know? I can see that price is generally moving down on top and generally moving up at the bottom. So what does that tell me? That support is pushing price up and resistance is pushing price down. So you generally would have spotted this triangle after the second point. So this is your first point, your second point. So now let's just label them. When you are doing your assignment, you want to make sure that you label them. So that is point 1. Make sure that your text is yellow. This is point 1. Again, you want to draw text. And that is point 1. So to edit the text, you need to select the text field and then just delete everything and type 1. The name doesn't really matter. Again, make sure your text is yellow. Try to avoid putting a label. This is a label. Because if you have a label, it moves with the screen. It stays still on the screen. If you draw text, it stays in place. So you want to use draw text, not draw text label. So let's draw text again. So this is our second point. And that is our second point. So now we have got our 2 points for support and 2 points for resistance. Now when you are doing your assignment, we do ask you to make sure that you put arrows. So you would want to use an arrow down here. Let's try and make your arrows turquoise so that it's easy for the person marking your assignment to see. And you just want to kind of highlight where your point 1 is, where your point 2 is. Okay, so now this is our triangle. Now we are promised 50% of the base, right? So the base is from point 1 to point 1 of our support and resistance. Now what you're using now is called your crosshair, and you find it in your left hand corner. So now your crosshair calculates how many points the market has moved from one point to another. So you want to start off at your first point and then move up to your second point. Now the first number on your crosshair is how many candlesticks your crosshair has moved over. Notice how as we move to your right, the number that is first grows, but the last 2 numbers barely grow. They are very random, and that is because we are not moving up or down but left and right. But at the same time, if we are on the line, then we have gone through 0 candlesticks, and if we move up or down, notice how the last 2 numbers move. So the middle number is basically how many points you have moved from the center, or where you clicked your crosshair. So remember, you want to click and hold, to your first point. So we have 425 divided by 2 is about 212. So let's see if it actually goes 212. It actually goes by more than 50% this time. So you want to write down how much your base was. So our base was 425. And just make sure that that's more or less next to the base, but not too close. And then let's just calculate the total break out. Okay, so it's 585. Now that was the breakout for this triangle. Now, the only way for you to spot triangles is for you to actually try and draw them. Now, you'll find that triangles don't break out the exact same way all the time. This is why you have got to study your triangles on each and every currency pair. Notice how this this triangle first triggered you to the top side. Whenever you are going to be in a negative, make sure that you highlight your triangle in the space where you are going to be in a negative and put an ellipse over it. You want to make sure that your ellipse is green, the color green, so that it highlights it for the person marking your assignment too. So over here, we would have been taken into the market. Price would have come all the way down, turn around, and then come up to take your profit. Now let's look at the base to see if that is true. So our base is let's get an accurate base. 408 points, which means it is 204 points that we are expecting to receive. So when price breaks out to the downside, it gives us more than what we expected. And when price comes back up to break out to the top side, it also gives us more than 50%. So in a nutshell, what this triangle did is it broke out to the downside and then went all the way to the top side to take your profit. Now, let's look at the different ways in which you can trade your triangles. For example, if you know that your currency pair has a tendency of its triangles breaking out in one direction, how are you going to trade that? What you could do is you could place a pending order on both ends. You've always got to ask yourself, how do I make the most money out of this opportunity? So you want to make sure you have got a pending order on the top and a pending order at the bottom. So if it breaks up, you're making money, but if it breaks down, you're also making money. Now, there are a few risks. Because your triangle moves up and down, you want to make sure that you are not placing your pending order inside your triangle. So I'm going to show you how to plan for this trading opportunity using the triangle we had just spotted. Now I'm going to go ahead and remove all these numbers and objects so that we can focus on a clean triangle. Now let's just say that we do not know what is going to happen, so we spot it somewhere here. And price is currently at this green candlestick. So we are simply going to take a vertical line. So draw vertical line and put it over that green candlestick. Why? Because that is the candlestick that is currently forming right now. Right now, from there, we want to take a horizontal line and place it over or in line where your vertical line touches your resistance. And then we want to take another line and place it where your vertical line touches your support. Now, why we do this is because when we place our pending orders, we do not want to be inside of the triangle. So we want to make sure that if we are taken into the market, It is definitely by the triangle breaking out of support and resistance. So if we place our pending orders above let's pretend that this is a pending order. If we place our pending order above this red line that we have just plotted, then we know that price has to break out of my triangle to get to my pending order. Again, if I place my pending order below this red line, I know that price has to break out of my triangle to trigger my pending order. Now, at what point do we place our take profit? Now, you want to place your take profit based on the breakout. So it's not from this line that you've placed. This line means nothing. It is from the triangle. So from this point of the triangle, we said that we want to get 208 points. Now, the spread on Euro USD is usually 24, so you want to cut the 24 out. So about 290 is where we want to place our take profit. Let's make this look like a real take profit. And again, by about 290. We always want to leave room for spread so that price passes our take profit properly before it reaches our target. Okay, so here we go. Pending order, take profit, pending order, take profit. If it breaks out to the top side, you're making money. If it breaks out to the downside, you're making money too, and you are not even at your screen. Now, you could trade this triangle the exact same way. You could take your time. Now, the importance of being honest with yourself is that you get to see what is really happening in the market. Now, if you are not honest with yourself, you would try to place your second point somewhere there and say, I would not have been triggered. But you need to be honest with yourself and make sure that your shadows or your support and resistance is reflected by the first and the second point. Now, let's say, for instance, let's move that there. We figured that this was a triangle. Once we saw this red candlestick right here. Now let's just apply what we've been doing. So from here, because you don't know whether it's going to break out cleanly or it's going to trigger you falsely. So you just assume that, okay, this is how this is going to work. So you are triggered into the market. Well, we're going to see if you are going to be triggered into the market because we spotted it over here and we want to place our pending orders above here. And below here. Now let's scroll forward. As you can see, we were clearly triggered into the market. Now your take profit would have been $200 and let's say 209 points away from your triangle. So remember, it's not from the line that you've drawn, but from your triangle at that point. So 209 points is somewhere there. That would be your take profit. And more or less 209 points down here too. Now what would have happened is you would have been triggered into a negative and price would have shot down, and this trade here would have been in an extreme negative. So you would have wondered whether you should close it or not. Now, the only way you know whether you should close a triangle or not is by gauging this currency pair's history of how it fails in its triangles. When you are studying triangles on the market, you need to check, how does this triangle fail? If you know that this triangle does this often where it'll trigger you to the top side and then it'll come down and then just go all the way up again, then you can actually take advantage of this opportunity. You need to be able to find the flaws in your triangles in order to make the most profit. So, this is what has happened with our triangle. It broke out just a little, turned around, went all the way down to take our profit, and then came all the way up to take our profit on top here. Now, this is how you usually trade it. You have got your buy somewhere there. You have got your buy somewhere there. And your sell somewhere there. Now you are triggered into your buy trade and then triggered into your sell trade. Now your buy trade is in a negative. Once you see it break right through and start going this way, you could actually place another sell. If you are in front of your market, your charts, and you see this, you should actually place another sell. And then you could actually place another buy at the bottom down here once you see it turning around. Now, because you know it is definitely going down, you can increase the amount of trades you have and say, okay, we are going down. But remember, risk management is important. You do not want to risk too much of your account. So, when you are going down, you are basically making 2 trades of a sell, and then you take profit with your sell trades at your 50%. And as you see price moving up again, you then decide you're going to buy. So you are not only getting these 2 sells, but you are also getting these 2 buys. So you get a buy from there to your take profit and to your take profit. And you get your 2 sells to your take profit too. Now, you can only do this if you know 100% that this currency pair has a tendency of its triangles failing this way. This is why it is so important for you to backtest and practice plotting these triangles. And be honest with yourself. Would I have been triggered in the market? You must always place your shadows, your trend lines for your support and resistance on your shadows, so that you are 100% honest with yourself in terms of whether you would have been triggered into the market and being in a negative or not. So scroll back into time and try and plot as many triangles as possible on each currency pair so that you know how that specific currency pair breaks out of its triangles. When you are plotting triangles and understanding triangles on Euro USD, understand triangles and trading triangles on Euro USD is a strategy on its own. If you now change to trading triangles on USD CAD, trading triangles on USD CAD is a strategy on its own. So you want to collect as many of these strategies as possible so you are never left in a point where you cannot place a trade. And you want to make sure that you put all your effort into studying these patterns so that when you look at the market and when you are in a negative, you know exactly what is going to happen. This is how you build confidence. Forex trading is 95% emotional. You want to make sure that you deal with that emotion by building confidence. And the only way to build confidence is to make sure that you are 100% sure of your currency pair. You have to form a relationship with your currency pair. You need to understand how it behaves. Because once you understand how it behaves, you can then predict how it is going to behave in the future. Now, that is all for triangles. I cannot emphasize this enough. Practice, practice, and practice some more. Make sure you plot your different triangles on your different currency pairs and start collecting these strategies. Okay then, see you in the next class.